Hey, what's going on, guys? Corey Smith here again with CoreFX. Just bringing you another market update here with our pre-week analysis. This is going to be October 1st, 2017 weekly analysis. Um, do these every week for you guys here on YouTube for free, and appreciate you guys taking the time out of your day to watch it and subscribe and like if you like what you see. Give me some comments for some advice or just some commentary, and really appreciate it, guys. For anyone that's new to this, I cover fundamental analysis, what happened last week, top performing and underperforming pairs, as well as what's going to happen this week, what's planned for the news, what to watch for, and then at the end I go over technical charting, as well as in the beginning I go over the technical charting for the major sevens and their index charts. So it's a really helpful video to help you guys get all your knowledge in one spot for the week ahead and prior. Alright, thank you guys. I'll go ahead and jump right in here. Starting with our currency performance for last week. This is going to be the 1 week performance, shows the relative overall strength or weakness. And as you can see here, the Swiss franc, US dollar, Japanese yen were the top three performing pairs, and then the New Zealand, Aussie, and Euro were the bottom three worst performing pairs. As you can see, we had about a 1.81% decrease in the New Zealand dollar. It's a decent move. And we had only a 0.16 increase in the Swiss franc. And that is because these pairs are all compared against the US dollar. That's how these comparisons are made. And due to the strength of the dollar this week, it made it look like every other pair was weaker. I'll go over each pair individually here, though, so we get a better idea of what's going on. Starting with the US dollar, it ended up higher on the week, as you can see. I switch this to the hourly. This is where we opened last Sunday. This is where we closed at around 93 area here on the chart. As you can see, we were in a steady uptrend all week long, maintaining these higher highs and higher lows. Perfect uptrend. Hit a top here at about 93.50 and have sold off a little and begin to range down here. Switching it to the dollar chart, the Dixie index here. As you can see, price was in a downtrend all year basically. Came down, bottomed out here with this inverse head and shoulders I told you guys about last week, and did end up coming up, breaking the neckline. Broke back up above this strong weekly resistance and has now sold off a little bit here. Price is now above the 50 and the 20 SMAs. Broke above it and has made now a new higher high, changing structure, changing trend to now becoming an uptrend. Now we could expect it to make a higher low and then continue higher with another higher high. And then that takes us over to the euro. As we see here, the euro opened on the week higher up here, ended up closing on the week lower. Almost similar with the dollar. We had a strong downtrend all week, lower lows, lower highs, and then we bottomed out here and kind of reversed and gained some strength back. Switching it over to the charts, though, we see the euro was in this strong uptrend. It has been behaving pretty much exactly inverse with the US dollar, and that's also because the dollar is so heavily traded in the forex markets. It kind of drives price. But as you can see here, we're in a strong, beautiful uptrend, and price came here, triple topped, could be a head and shoulder pattern as well, and then has now broken structure, broken this trend line, broke below this strong weekly what was support, and has now bounced lower, hit support again, and has bounced back up, likely to get a retest here of this prior important zone before rolling back over. We got a lower low set here, lower high being made, then we can expect another lower low down to about the 112 area. Moving on to the yen, Japanese yen this week. We can see we opened here, closed slightly lower, so not a big deal, but it was weaker on the week, and you can see we were strongly weaker at the beginning of the week, and then it came back and gained a little bit back and has been range bound. As you can see on the chart here, we have been in this downtrend now, and we broke even lower, made another lower low, broke 200 SMA, 20 and 50 SMAs are crossed and now downward sloping, coming back up here to make another lower high, and then potentially rolling back over to set a new lower low and possibly even come down to retest the 84 strong support zone down here. Moving on to the pound. On the week overall, slightly lower. Steady move lower on the week. Switching it over to the chart, you can see here we've been in a strong bullish up move. Then we are in this high and tight basing pattern. We have actually now broken out of the basing pattern lower and back down to this strong resistance, now turned support zone. Even though it did retrace down and break down below here, it hasn't really broken structure. Although it was in this consolidation pattern, it never really had a correction to set a new lower low. I mean, a new higher low before going up. So we're still possibility here, tapping this 20 SMA. SMAs are all in bullish upward sloping spacing from each other. So we're still in a bullish market here with the pound. We could see bounce off this 20 SMA in this zone here, continue back up. And if we break this low here in this 20 SMA, the next pullback correction zone I would have would be 128 or 129 area down here. Fundamentally, I'm still very bullish with the pound, and there's nothing really crazy going on. This wasn't the best week for them, but still overall bullish on the pound, so I expect there to be a bounce somewhere in this region, continue higher. We could even throw a fib here real quick from this last strong move. Swing low to swing high. You can see we're nearing the 382 zone. Could even come back to, like I was saying, this 50% fib level before continuing higher. Moving on to the Canadian dollar. On the week, we were lower again this week as this short-term downtrend has been going on here. Switching over to the CAD's chart, you saw we made this very strong impulse higher with the rate increase from the Canadian Bank of Canada. And since then, we have sold off completely over the past few weeks. Now we're back at this strong breakout level around 79. And we have actually formed a little hammer pattern here on this support and just barely under, but on still the 50 SMA. So this could be our correction, and we could see another bounce higher, continue this uptrend possibly, and make another leg. Or if we continue to sell off this week, we will be definitely back to a range bound / downtrend market here with the CAD. But again, fundamentally, I'm sound that the Canadian dollar is going to continue to gain strength. And if we actually take this to a weekly chart, you can see a little better this uptrend. You can see this strong weekly zone we broke out of here, sold off to retest, and is now at this level here, which we could see a bounce and another leg higher for another higher high. Moving on, we have the Swiss franc. Swiss franc was choppy again all week. As you can see from where we opened here, chopped around, closed around the same, a little bit higher. Taking it over to the chart. This is the weekly. I'll drop it back down to the daily. You can see we are still in this ugly looking choppy chart. We're at this support like I said we were at last week. It actually did break below the support, but buyers came in and quickly shot it back up. So we're still in this range. No significant moves one way or another. But we do have a short-term series of lower lows and lower highs coming down here. SMAs have crossed and are now rolling over, so we could see potentially a break of this 97 level to the downside. Could signal a good rollover here for the Swiss franc. And then we have the Aussie. Aussie dollar was significantly lower on the week, as you can see from the steadily downtrend from top left to bottom right we're seeing on the charts here. If you take it over to the technical chart here for the index, you can see Aussie has now violated structure, broke this trend line, set a new lower low, breaking this uptrend that we were in, and has now made a strong leg lower to this support zone. We could expect again with this another lower high set, retest this strong area up here, and then continue lower with potentially another leg lower. All in all, if you go to the higher time frames though, you can see that we still have higher time frame trends, but if you look at this big weekly candle close we had last week, you can see that this is a very bearish sign, and this level could hold here and could bounce, and then we'd be in this range here, and we'd have to wait for a break higher or lower. Or if it comes this week, breaks lower than here, the next very strong level is going to be right above 77 here, right around 77.50 actually, to see how that level holds, and we could see it push lower, bounce off that a little, and then break that. Or we could see this stay in this range and possibly come back up to test the 81 level resistance here. Alright, and finally we have the New Zealand dollar. Very similar to the Australian dollar, but as you can see, it was bearish this week and then pretty range bound for most of the week. Ended lower on the week though. as we take it to the daily chart on here, you can see that we were last week up at this resistance and expecting potentially continuation of these higher highs, higher lows, higher high, higher low, break higher. But as you can see, we sold off right back down to this strong support. So we are still range bound in this whole area here. We didn't have any break of this structure until this high is broken or this low is broken. I'm not really any I don't really have any strong convictions one way or another, so we got to just wait for a level to be broken here. But following this strong bearish week, we could see the continuation momentum of the bears push it lower. And finally, one more chart I did want to cover real quick here was the S&P 500. This is going to be the U.S. Stock market index that we follow to keep track of the equity markets. And as you can see this week, we had a strong break higher, setting new higher highs in the record territory. Still within this strong uptrend, and this high base breaks with the new bullish leg. Tax reform is now in discussion, so we could see this continuation higher if the presidency and his branch can manage to get to some kind of agreement on a tax plan and get some kind of support here in the House and Senate to get something done. But this is good to watch for risk on, risk off sentiment, and we'd like to keep an eye on it here at CoreFX. Now switching over to the news, starting with last week. This was a big central bank speakers week, as I went over, and we had a lot of rhetoric out of the central banks. But beginning last week, I mentioned the German elections last Sunday, and Angela Merkel actually, similar story to what happened with Theresa May and Donald Trump in the United States, unexpected loss of majority. Polls were expecting her to have won easily, and it didn't end up happening. And actually, the AfD anti-immigration group wins a seat in government for the first time. This is showing the large German people's opposition of the immigration policy that Merkel represents, allowing millions of refugees into Germany. And this could just continue to show this populist movement that we're getting in this more nationalist viewpoint of closing borders and this anti-globalization kind of approach we've been seeing with these bilateral trade deals instead of these big open border policy we've been seeing in the world, especially Europe. Something to keep an eye on. Definitely can cause some volatility with the euro, as the German economy is the strongest economy in the Eurozone right now. So it's something definitely key to watch. Then Monday we had Kuroda, the governor of the Bank of Japan, spoke. Basically just giving an overall outlook over the economy and everything. And he says inflation likely to pick up in line with the Bank of Japan's expectations, which is a good sign. Bank of Japan's expectation is 2%, as with most central banks. Also, he said many companies in Japan have increased wages for their employees, which is another great sign, because wage growth is something we're seeing struggle around the world. But also, while they increased wage growth, they kept goods and services unchanged out of competition. So this is spurring that lack of inflation that we're seeing around the world. So he's thinking that as the competition kind of eases, that they're eventually going to have to hike these prices, these companies, spurring this inflation. Also, Japan's seen 6 consecutive quarters of rising GDP, which is the most in nearly a decade for Japan. So Japan's finally starting to jump on this bandwagon of economic growth. Draghi also spoke, saying the ECB is becoming more confident about inflation rebound in Europe. A short-term and medium-term outlook's a little bit uncertain and cloudy, and substantial stimulus is still required, he's saying, but his speech was pretty much similar to this earlier in September's ECB statement. So, nothing too crazy going on there. We went right away into Tuesday morning, the U.S. dollars consumer confidence report. We covered what this was last week, but it was basically on par with expectations. Slightly under, but definitely nothing significant, and it's still showing a very high consumer confidence level in the U.S. New home sales, you can see here, was a big miss. This is just the impacts of the hurricanes finally starting to set in on the markets a little bit. Also, Yellen spoke. Yellen's speech, basically, she said this was basically a big contributor to the U.S. strength this week. But she said the gradual rate hikes are appropriate that they've been doing, and says it basically would be stupid not to be hiking rates and just waiting for this inflation target of 2% to hit. So further rhetoric hinting at a rate hike in December, which is really what I think is going to ultimately start pushing this U.S. dollar higher, as we should start gaining strength here moving into the December meeting where they expect the hike could happen. Then we went on to U.S. durable goods on Wednesday, beat expectations. Another good sign here showing continued strength in manufacturing sector. And then we had Bank of Canada's Polo speak. Um, Basically, he said monetary policy approach is pretty much entirely data dependent now, as with most central banks. Um, this is due to the inflation outlook being so unknown and cloudy, as we've been seeing pretty much consistently across the board with these central banks. After that, we went into the New Zealand's Reserve Bank of New Zealand, their rate statement that they had. We briefly went over this. So as we mentioned last week, Governor Wheeler has stepped down from her term ended with the head of the Reserve Bank of New Zealand, and Grant Spencer, who's now the acting governor for the next 6 months, is the new, until there's a new one elected, he's now the acting governor. This was his first RBNZ statement. Pretty much kept things not much changed since the August meeting. He wants a weak New Zealand dollar to help the economy, as weakness in the construction sector makes them more cautious about economic growth. Expects no rate hikes until late 2019, but will play monetary policy as needed. And he said he's to maintain growth moving forward. The economy is too, and the August meeting said improved growth. So he was slight. So basically, the August meeting he said there was improved growth, and this meeting he said their growth is maintaining. So it's could be read as slightly more bearish rhetoric, as it said it's maintaining growth instead of improving growth, but nothing really crazy going on there. This takes us over to Crota spoke again on Thursday last week. He spoke twice last week. And basically, key takeaway from this speech was that he sees Japanese current economic expansion as very sustainable. And like I was saying, this is good rhetoric for out of Japan and what we've been used to. We had Carney speak again on Thursday as well, and he spoke about the challenges ahead that the UK faces with Brexit and how monetary policy can't really do everything. Income growth is weakening amidst Brexit, and the new trade deals with the EU are the biggest challenge they see. And basically, that wage growth weakening is out of the scope of the Bank of England and their monetary policy, what they can and can't do. So really, the new trade agreements that are going to be established with the European Union is going to be the biggest focus. Theresa May spoke about the challenges as well after, and noted how free market's going to really be the key driver to increase living standards and prosperity in the United Kingdom. After this, we had the U.S. dollar had final GDP numbers which beat expectations, 3.1% growth. That's great. That's showing very strong quarter as far as growth goes for the GDP. It's overall representation of the entire economy. So good numbers here out of the U.S. continuing. Moving us to Friday. Friday we had overnight the pound's current account, which actually missed expectations pretty badly. This is the difference between imports and exports, and this could be Brexit starting to take a toll on the economy as there's less business and transactions going on, and people are a little bit more fearful of the changing economic conditions. And then we had the Canadian dollar's GDP, which was flat. This was slightly worse than expected. Another thing that's kind of dampened the Canadian dollar a little bit here. But again, nothing too crazy. And then Carney spoke again, saying the Bank of England's ready to increase rates if the economy continues to show strong data, but there's no certain time frame or anything like that it's going to happen, that the market's weighing in or anything. But this is hawkish, as Carney's still expecting to keep his eyes out for strong data numbers to help us here with the UK inflation, and hiking rates here could help. This takes us into this week. October 1st is today. It's Sunday. And something that's not on the news here that's going on right now is the Spanish referendum that we have going on, Catalonia. So really quickly to cover it, Catalan and Madrid are both prominent northeastern regions in Spain, the wealthier producing sections of the country. And Catalan is kind of unique and always has been its own little province, and they have the unique language and customs there. And basically, they're unhappy with how things have been with the Spanish government and Madrid, and they feel they're being taken advantage of. So what they did was they formed a referendum for the people to vote on becoming an independent state, like we saw with the Brexit and the UK leaving the European Union. Only this would be independent of Spain, and basically the Madrid and Spanish government looked into it and deemed the referendum illegal. And to but however, the Catalonian people are still moving forward with the referendum and the vote. So to stop the referendum vote from happening, the Spanish government's called in thousands of police officers to the cities and the polling locations to restrict citizens from being able to vote. But just today, what's going on right now, there's tens of thousands of people all coming to vote, and they're clashing with the police. Over 300 people are already injured, a dozen police officers. And according to the New York Times, nearly three-quarters of the stations have successfully taken voters. So this is a very drastic thing going on right now. Could have impact on the euro. Basically, just as instability continues in the eurozone, as between Merkel, Theresa May, the UK Brexit. Now, if Catalan declares their independence from Spain, who knows what could happen here moving forward. So, just more instability in the eurozone and more risk of potentially the eurozone breaking apart. Something to keep an eye on that could have some drastic measures down the road. But I just wanted to cover that real quick because it's not on here. Then going into our news, we have on Monday overnight the pound has manufacturing PMI. Again, this is the manufacturing purchasing managers surveyed over a scale of big companies over there to get a basically just to get an overall gauge of the strength of their sector, the manufacturing sector, how employment growth, all that's looking for them. I actually have the manufacturing index out of Japan Sunday night too that I didn't touch on here. It's usually not too big of a mover, but something to watch for the Japanese economy. That takes us in. On Monday we have ISM manufacturing PMI. Again, this is the same number coming out of the pound. And then we go into the RBA rate statement. This is Australia's central bank meeting. It's the last meeting. They kept the outlook pretty much the same. Rates stayed unchanged, 1.5%. Global growth is good, but uncertainties do remain. And Governor Lowe was last time he spoke, he was hawkish, saying the next time they change rates is going to be higher, as they've been decreasing their expanding the monetary policy and decreasing interest rates for a number of years now. This is a very hawkish sign. And that being said, though, there's still no idea of when or how, and there's little to no expectations of a rate hike this meeting. But as usual, we will watch for his rhetoric and his comments and see how hawkish they sound over there. And any hint at a potential plan to hike rates could bring some very strong strength to the Aussie dollar. And then Tuesday, October 3rd, we have construction PMI numbers out of the pound. That takes us into then services PMI numbers out of the pound Wednesday. And then we have crude inventory numbers, another ISM non-manufacturing PMI number. So another PMI number to gauge purchasing managers, but not manufacturing. And then this takes us right into Draghi speaking on Wednesday. She's going to be speaking in Frankfurt. He's going to be speaking in Frankfurt at the inauguration of the European Central Bank Visitor Center. Again, watch some of his rhetoric to see if he says anything that could influence monetary policy. Then we have Yellen speaking out of the U.S. Fed, and she speaks at the Federal Reserve Bank of St. Louis. Again, watching her wording could have some implications on monetary policy and the strength of the dollar. Then we have Australian news that night with retail sales and trade balance, difference between imports and exports, and then the how the retail sector is doing, huge sector in the economy. Thursday we have the trade balance out of Canada, which is the difference between imports and exports gauged in the economy and how they're doing. And then we have huge Friday, as always, the first Friday of the month. We have NFP non-farm employment change reports month over month. So this is going to be for the month of September. These numbers are issued in the first Friday of the following month. So this is going to be October 6th. And this is a huge mover of the U.S. dollar, very volatile. And this could continue to lead into the reversal and strengthen of the U.S. dollar, or potentially short-term or long-term, whatever, push it down a little lower if we have a big miss here. basically we just got to wait to see what the numbers show us. And we also have the same report out of the Canadian economy. So big week for employment numbers this week. Other than that, nothing too crazy going on. We do have one rate statement, but another good week. We should have some really good trading opportunities this week as summer's ended and we're now into October, and we should have some more trading opportunities present to us now. Alrighty, so that kind of covers the economic stuff going on, the fundamentals for this week ahead, and this takes us over to the technical side of things. We'll check out some charts now. I'll take you guys over and run through the majors real quick and see what's going on. As you saw here, we saw last week this triple top head and shoulders formation on the euro. As we discussed, we were still in a high basing pattern, so we could have broken higher and continued the uptrend, but this reversal did come evident and we got a break lower. This was a really nice reversal trade here with the break of this support zone as we came down and set a lower low, broke the 50 and the 20 SMAs, and now set what could be a reverse to the trend with a new lower low set. The uptrend is definitely invalidated now, and we have the very, very early on stage of a reversal to a downtrend. But with trading, when we see these trends reverse, usually the early on moves that it makes in the beginning stage of the reversal tends to be one of the strongest moves the trend makes. That first early on push is typically very strong. So we're coming back up here to retest this. Could see a bounce off of this now broken support, turn resistance, and a continuation lower. Just wanted to do something real quick with you guys. It's the end of the month, start of a new month. So one thing that people don't really tend to notice sometimes, but this means a new monthly candle has closed, and there is going to be the opening of a new monthly candle. As we know, these high time frame charts can be very accurate and very strong levels to watch on there. So you want to check all your charts monthly levels now and see where we're at. As you see from this monthly chart here of the euro dollar, we had pushed higher for a series of months all year long and then hit this very strong level here. As you can see in the previous history, it has been a very strong zone. And has now hit it, bounced off, hit it again, tested it a second time this month, and has now closed with a slightly bearish engulfing pattern, but we got a tweezer top here, 2 wicks rejecting resistance. So this is a very strong reversal sign as well. We hit it right on the 50 SMA, so we will see what happens here moving forward, but that's a very strong sign there. Moving on to the pound dollar, as you saw, we've been in this uptrend. A couple weeks ago, we broke up above this strong resistance and have formed the basing pattern, a high base here, but broke out of the basing pattern, has now come down to retest this broken zone. So we could wait to see what happens here. We could see a bounce higher with a retest this high and potentially a higher high made or a rollover and a trend reversal if we set a new lower low here. Switching this to the monthly chart, though, we can see this came to this very strong zone here. It's not going to load that far back, but came to this very strong zone here on the weekly chart. You can see a lot of these rejection wicks here. This was a nice level on the weekly charts and has actually managed to break up above these monthly ranges here for the past few months and back above, could be breaking out of this resistance and now setting a strong precedence for some bullish expectations here moving forward. But we'll have to wait and see how this structure holds here. Dollar CAD, pretty similar, downtrend moving along, and now we have come back to retest this strong broken support we broke out of. Price has hit it. It's right on the 50 SMA, and kind of 2 days here, the end this week, with some attempts to push it higher, and then the bears have stepped in and kind of pushed price back. So we'll have to wait and see what happens here if price is able to break back above this and set a new higher high, or if we're going to just be in a lower high here and now continue to roll over and set a lower low. Switching to the monthly chart, you can see that this candle was a very strong rejection wick bar here. We've got a strong dragonfly doji / pin bar, rejected, bounced off the 50 and the 200 SMA and the strong resistance area, support areas here, and has failed to break this strong weekly support we've got here. But we'll see again on this lower time frame daily chart how this level holds. New Zealand dollar, US dollar, we were back up here at this resistance last week, thinking we could have broken higher with this series of higher highs and higher lows to continue it, but we have actually broken structure and set a new lower low, but we are still range bound. You know, we broke through here this series of higher highs and higher lows, and we're at this strong support, but no real structure. I don't really have any conviction here either way until this low or this high is broken. Um, and that takes us into the dollar yen. Dollar yen was, like we said last week, shot back up to this resistance area, and this week actually did manage to break out, but then quickly came back under, and this could either be a retest or a false break as it could roll back over. But we're now above the the 200 SMA. 20 crossed above the 50. Both of them are sloping upwards, so we are in an uptrend here on the yen. We'll just have to wait and see what happens. And the monthly chart shows us a strong bullish engulfing pattern, off a little bit of support here, but this is a very choppy range bound area, so no real conviction off that monthly close here. Moving forward to the Aussie dollar, as you can see here with the Aussie dollar, the uptrend has reversed as the 50 SMA is now broken and a new lower low has been set. Both moving averages are rolling over now, and you can see they're sloping downward. The 20 might come cross under the 50 if we have another low made here, but could expect another potentially a lower high made here and then a lower low roll back over down to this 7750 strong support zone here. But again, like we have with some of the other charts, we see a reversal here as price is now rolling over. Dollar Swiss franc, as you guys know, I'm not a fan of this chart at all. It's still range bound at the top of the range under very strong resistance. If you see here, we've got price rejecting this zone multiple times. It's failed to pass. There's rejection wicks, strong moves away from this zone. So this is a very strong resistance level here. We'll have to wait and see if the dollar Swiss is able to break above this. If it's able to break above this, this could be a nice long trade set up in here. If we get a retest of this zone before pushing higher or something of the sort. So good chart to keep an eye on now that we're at these significant levels. But we'll just have to wait and see how this responds this week. Alright guys, that pretty much does it for the week here. Keep an eye on these events that I noted here. Watch for some trades around them or manage your trades strictly around it. I appreciate you guys taking the time out of your day to watch these videos. If you're interested in learning some more with CoreFX, you can reach out to me either on my Instagram, core.fx. Give me a follow there. Check out some of my analysis I post. You can email me, Corey@corefxtrading.com. Check out the website, corefxtrading.com. And let me know if you guys have any questions, recommendations, anything of the sort. Thank you guys. I appreciate taking the time to watch these, and I will talk to you later.